Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Good morning, everybody, and welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope you all had an amazing trading day yesterday as we are doing our first DMC of the week. I don't really do one on Monday mornings since we have our live trading room on Sunday evenings. Real quick note, if you are in the Houston, Texas area, we are doing a traders meetup on Friday night. I'd love to have you join us. I'm going to put a link in the comment section down below. The idea of this traders meetup is really just to get together, share some ideas and thoughts with other people that are in the markets. So we're going to do that on Friday evening at about 7 o'clock. Love to have you join us. No pitch, just drinks. It's all that's the whole concept. So, all right, let's go ahead and dive right in. S&P this morning, we're up about 10. Now, looking at this, yesterday I don't do the DMCs on Mondays, but yesterday we fell off of this level very nicely. Now it had this little level here on our Sunday night live trade room. We hit the level and then came back down to the fair price value area. So we got a little bit of move up from there. So what are we looking at for today? Well, price is moving up above us just a little bit. Now, when I go to the 4-hour, what I can see is that I've put in a lower swing low. No question I've put in a lower swing low. I have not yet put in a lower swing high. So technically, I'm still a buyer in my big picture. Now, that's the S&P. Same thing goes, by the way, for the Nasdaq. In the Nasdaq 4-hour, I have put in a lower swing low, but I've not yet put in a lower swing high. However, if I look at, which I don't normally look at this one in the DMC, we normally look at it in the live trade rooms, the Russell has put in a lower swing low and a lower swing high. So we have a lower swing low and a lower swing high in the Russell. And the Russell has shown us a fair amount of weakness. We got short on this level up here in the Russell last week, and it was a really nice, got a really nice move out of that level. So now what are we looking like? Well, to me, that shows a lot of weakness that our small caps are kind of leading us to the downside. So now I would look for where's the area of reversal if we do come back up a bit higher. So going to the hourly chart, I can see that I've got a little bit of a level here on the 15-minute, and this is a 15-minute level. This zone here, 1540 by 1549, for a potential reversal if we do kind of continue to run up. Now, there's a couple of other areas just above here, just because if this one breaks, there's a few more up here as well that are interesting levels. So what am I looking for today in the S&P? Well, I've got a 15-minute level up above me, very similar to the one that was identified in the Russell, and you may get a little breakout long above this area here as a chance to play it up to that region. Now, shorts are still lower probability because of the fact that we are in a downward trending market, an upward trending market on the big picture. But with the Russell being a downward trending market, I do have a little bit more confidence in them. That level in the Nasdaq looks like this, as we are sitting there between 74.28 and 74.49. Once again, you may get a little opportunity at a breakout to the upside above here if you want to give that one a shot. Now, I would need to see basing before that level before I would take that breakout to the upside. Crude oil. We had a little bit of a reversal off of this low. Prices continued to move up. So I wrap my lines around this area in here. If we get a reversal today between 59.06, 59.26, I think is our best opportunity in crude. Gold. We had a breakout long in gold set up last week above this area here. And so that breakout area in gold worked out very, very nicely. However, we did not come quite all the way up to our short entry here, 1325.8 or 9 by 1328.8. So that level I've got to change to a confirmation style entry. And then our next area is going to be this 1319 by 1321. This is a little bit of a base drop below that pivot high. So it's a little bit tighter of a level, but I think it could be valid coming into today. when I look at gold on a 4-hour, right, my 4-hour is still to the upside. So my 4-hour is definitely telling me to be a buyer, and there could be a good buying opportunity somewhere down in here on the hourly chart. So as I go down to the hourly chart, but I don't really love any of those levels. They're not super clean. And so if you really do still want to maybe give that a shot on the 4-hour, you'd look for a candle to candle somewhere off of, somewhere in this region. You could trade this in a candle to candle style to go back up, because we are getting that price action shape, right? That price action shape, which is a fairly, you know, well recognized shape, is this move up and a pullback, right? And that typically moves back, you know, we're from that distance, that's a decent retracement. We're at about a 50% retracement somewhere back in here, 50% of that move. And when I'm looking, oftentimes, you know, you'll see these move up in these retracements. You know, these retracements, I don't talk a lot about Fibonacci's, but this shape is a bull pullback, and oftentimes those pullback will come back to Fibonacci retracement levels. Now, why do I care about the Fibonacci's? Well, because enough algorithms do as well, and that's one of the things to look at and consider. Moving over into the bonds, our bond markets that we have identified. So in the ZN, we've got prices are still moving higher. If you do want to take a breakout, I'd look above this little level here, because on our 4-hour still telling me upward price action reigns, but I need a little reversal to get into it. In the Aussie, so had this little area in here in the Aussie for a breakdown. We got a little move out of that level and then popped right back up. So now when I look at this on the 4-hour, I'm in a sideways price action for the most part, lower, you know, roughly higher lows. You know, it's technically an upward trend, but it's a fairly weak one. And so what I'm going to look to do is I'd look to be a buyer on a decent pullback, but I don't really have a clean level of demand until one of these ranges down in here. And so ultimately, I don't know that we're going to get another opportunity this low, but that's really ultimately where I would look for is a pullback somewhere into this range down here. In the euro, we are so far between our areas of demand and supply that I'm just going to leave it be. Technically, you know, you could probably, if you wanted to try a breakout above or below this tight range, you can. I typically have seen that those are very, very difficult trading environments. And sometimes what you'll do is you'll get just, you know, a spike up or a spike down around it before a big move. So we could be heading for a big move. And so breakouts are a little bit more risky, but it is definitely something that you could play if you want to give that a go. And then in the Canadian dollar, our level is a confirmation style entry up above us in here. Taking a look, last but certainly not least, Great British Pound and Japanese Yen. So in the Great British Pound, we are sitting, we had a little level in play here from our Sunday night live trade room. So let me just highlight that level that we had in play. This was our level from the Sunday night trade room, but if you notice, price came into the level 1, 2, 3, 4, 5, 6. And price had not moved our direction, right? 7, 8, 9, 10, 11, 12. It wouldn't have been stopped out until about 20 candles later. Well, there's no reason to sit there for the whole stop out. And that's why we have our 6 candle rule in place. And the 6 candle rule says if price hasn't moved my direction in 6 candles, get out, don't spend any more time on it. In the Japanese yen, we see that we've come down to a 15-minute area of demand. Our 6 candle rule looks like it could come into play here really quickly, because remember, it's 6 candles on our entry time frame, and we got in on the 15-minute chart. I know that based on the purple. So 1, 2, 3, 4. If we don't move out of here in the next 2 candlesticks, I'm going to keep a tight eye on this thing. This thing will not continue to move. We would definitely, based on our rules, that would no longer be a valid trade to stay in any longer. Now, if we're even up here, then it's just take your stop and move it to break even, right? Doesn't mean I have to close out of the position, but I need to see some sort of positive movement in my direction. All right, so hope you guys have a great trading day. If you have any questions, please feel free to send us an email, support@tradersarmy.com. I will see you soon. Have a great day. Later.